I'm John Kaiser at the Metals Investor Forum in Vancouver, May 27th, 2023. I am speaking with Allan Frame, CEO, and Lawrence Tsang, VP Exploration of Beyond Lithium. Al and Lawrence, welcome to Vancouver.
Thank you, John.
Al, you recently retired after a 40-year period as a broker specializing in resource juniors. In what way has the dynamics between broker, investor, and promoter changed from the 80s and 90s? And what is it like today?
Well, I started in 1975, John, and things were quite a bit different in those days. The promoters were a really integral, important part of all the junior resource issuers. You know, there were people like Murray Pesum and others, who historically will go down as probably the greatest promoters of all time. And actually, the buying audience, the shareholders really listened to them. They had a lot of clout. And when they promoted things and got onto the right projects, they drove in tons of money, and they were really an integral part of the business. Things have changed so dramatically since then, and that's back in 75 and through the 80s. And now with all the streaming and the different things that are out there and the Robin Hoods of the world, I mean, everything's different. Even the philosophy for, the younger people that are quote investors is different in that they're not looking for any long-term gains, or they're really not looking to build anything. They're looking for, in some cases, a company going bankrupt that they all get behind and, get a quadruple gain out of. So it's really, really different. It's so radically different. It's like two different industries, quite honestly. But today is good though, because you can pick through and you have to do more social media work because that's the world that we live in today. But I think for me, being a broker all my life and now being on the other side, the most important thing, when you're choosing, people to do your financings with is who your broker is and what his philosophies are. Because if you got a guy that considers a long-term hold for a client between 4 and 5 days, probably not the type of person you want to do resource business with. But on the other hand, if you have people that have that builder's ethic, and if their clientele understands, all the trials and tribulations of exploration, trying to develop and find assets, that's the ticket. So you have to be pretty selective. Especially with today's flow throughs, it's easy to find a broker that will do them because of all the special, tax credits and things. But if you've got to spend the next 6 months eating every piece of paper you've ever sold, I mean, that's just no fun. You can't get any real field work done. So I'm saying the difference is promoters used to rule. Now they still have, an integral part. They do, but I guess they're different. The promotions are different. They're more factual, based on hard evidence. And if you're fortunate enough to select long-term shareholders that understand the resource business, you can build a pretty nice company. At the end of the day, for explorers, it's all in the drill bit anyway, but you have to have people that have the right philosophy to buy and be shareholders of your company. So that's the major differences between yesterday and today.
So after retiring from your career as a broker, you decided to become a CEO of what was at the time a nondescript junior, and it's now acquired this very impressive portfolio of lithium prospects in Ontario. So what's going to be your strategy to make people care about your company and raise the money to keep advancing these projects as you get to work this summer?
Well, there are several reasons I think, that people should be interested in our company and what we intend to do. Firstly, we have a very good share structure, and if I've learned nothing else in 47 years, you can't start out with 1 billion shares and work your way down because it doesn't work. So this company has fully diluted 33 million, non-diluted 28 million shares out. And of that, management owns a considerable percentage, over 50%, and our prospector partners own about 6 or 7%. And the rest of the shareholders, as I had alluded to earlier, they are long-term people. They're people I've known, most of my adult life that I've kind of grown up with, and they're in the builders category. So, so for starters, you've got a company that's structured really well. We have about $1.3, $1.4 million in cash right now, and our budget for the year for this year to enhance value through the boots and ground in the field is about $1.2 million. So we're happy. You know, we're budgeted out really well. We've got 9 people in the field already, so I think we've got a head start on most companies there. And at the same time, we are into what we call phase 1, which is basically ground truthing all of these properties and categorizing them or putting them in tiers, let's say tiers 1, 2, and 3. After that, we'll enter this year into phase 2, which will take probably, 10 to 15 of those properties in tier 1, and we'll dig into them a little deeper and set up drill programs. And optimistically, before the end of the year, we'll poke a couple holes in some of those properties. And one of the reasons that I became involved, when I was asked to join this company in this present capacity, I thought, well, you better look a little different than everybody else. You have to have some unique twist to you before you get involved in these things. So besides the share structure, I said to the fellows that were talking to me, well, the only thing we can do at this stage of the game to be different is be big, go big or go home. Hence the 150,000 hectares that we have to work with. So I'm pretty impressed with that. There's a longer story behind how that came about, which we'll get to, I'm sure. But so here we are, the largest landowner in Ontario. We're fully financed for 2023. We've got an awesome share structure, and the people that have joined us in recent weeks and months are just awesome people. They're really technical, they're smart, they're fast, they're good. And we intend to get maximum value for the buck by working on the ground.
Okay. Lawrence, you were brought on board to design and operate an exploration program to assess this portfolio of properties, which was assembled by 2 prospectors, Jason LeBlanc and Jace Angel. What can you tell us about the method they used to identify and stake these particular properties? And following the review you recently did of all this, what do you see as the potential that a major lithium-enriched pegmatite similar to Frontier's PAC and Spark can be found on one or more of these prospects?
Right. I'm so glad that Al called me up and invited me to join Beyond Lithium. And at that time, I was able to have great conversation with Jason and Jace before we started the field program. And I got to give credit to those two guys. They are keen and very organized, and they have a very good systematic staking methodology for getting the projects that we have now. And the way they do it, they have like 10 criteria that they look at every single project. They spend over 4,000 hours looking at basically all the claims around Ontario. For example, they look at if the projects are situated along sub-province boundary, do they have the right host rock? Are they in the mafic sediments or metavolcanic host rock? And with historical mappings from assessment report and Ontario geological maps, could we map the pegmatites on some of the project? And right now, georeferencing all the maps that we have mapped over 500 pegmatites just based on the maps that we compiled. So that's part of the hours they put in. And also they outlines all the pegmatites, look at the densities, the size of it. Are they substantial? Do they form a trend? And then we look at also, are there good geochem data around to show that, okay, are those granite fractionated that has a higher potential to find lithium-bearing pegmatites? So beyond with all that criteria and some of the project, we also have historical drill holes, and we're able to locate 3 projects of the drill holes, drill core. I think that also puts some of the project become higher priority, because in those drill cores actually notice with pegmatite intercepts and with significant width. So that's part of the program in phase 1. We're going to relog some of the core, and I think that will give us a really good idea of those projects tiers. And with all that different criteria, and all the project at least meet the minimum of 6 to 8 criteria before they stake it. And then after I review all those projects, and most projects happen be around known deposit, and some of them actually even along the same trend, same structural trend of, like, for example, the PAC and Spark of the Frontier Lithium, along the trend of green technology metals of the root deposit, and so on and so on. So that gives us pretty confident saying, okay, when we go out there, we're going to prospect the pegmatites being mapped before, and then we're going to sample them to see what do we get. And then that will give us a good idea in phase one of all the 64 projects. We can put into different tiers, priority, as Al mentioned. Then we're going to advance to the second phase and potentially put a few drill holes in some of the projects.
The boots on the ground is going to be kind of like this phrase everybody's going to become familiar with. And I believe that this year will be the biggest prospecting binge in the history of Canadian exploration across Canada, because there are all these pegmatites that were documented in the past. You have to go into the field and you can assess, okay, what is it that you're looking at? What is the size potential of it? And the lithium markets, if the International Energy Agency is correct, it has to expand 600% to meet EV goals for 2030. And that a $100 to $200 billion a year market down the road for lithium. That puts it in the league of yellow gold and red gold, copper. But what's fascinating is that, like, rumors died decades ago. The rumor mill that used to drive back in the 80s, 90s, eventually all the protocols came in place, assays, core was shipped, the visuals, okay, what does it mean? Well, usually not what the assays eventually reported. So everything's become kind of, okay, wait 2 months for assays, get the results. It's either good or bad. The stock reacts this way or that way. But what we're dealing with here is you go out there with your team and find a pegmatite and assess it and all that. And if it's going to be 1% at $10 a pound, which is the low end of the range, that's equivalent to 8.5 gram gold or 6% copper, roughly $500 rock value. Open pitable with potential sizes up to 100 million tons. And this can be seen in the field. And I understand that you're using a LIPS gun or as an XRF gun to help identify to what degree they are lithium enriched. But all your other workers in the field, how are you going to keep them from leaking your excitement out into the market? I mean, the regulators can't control it. They control assay information and that. But I think the rumor mill is going to become incredible. And with the social media, all these reports from the field this summer, how are you going to try and keep a lid on that? Or does it even matter?
From the regulator point of view, for sure it matters. But as you mentioned, right now with pegmatite-like exploration, you take pictures, and when you be boots on the ground, you see it, you can measure it easily, and you can follow it. And as you mentioned, we're using a LIPS gun, and right now we haven't put out any data about that because we want to build up a little bit larger database before we announce anything that we have done so far about using LIPS gun correlate to what we found. And pictures wise, we're getting pictures from the field every day. And then I think seeing the pegmatites, as you say, you find the right mineralogy using a LIPS gun, you're gonna get lithium with the right minerals. And also by doing so, getting different mineralogy, you can kind of vector yourself where you are to the harder part of the system. So I think lithium exploration wise, visual speculation, I think carries heavier weight than perhaps precious metal in the gold. That's gonna get better. But with the pegmatite dikes, if we know the grade of that, we can follow the trend of the strike and dip of that. We can follow it for miles, and I think that makes visual prospecting more important than before and for other projects.
Okay, and with the $1.2 million budget that you have for this summer's program, how many of the 66 properties could you realistically do a good field inspection of this summer so that you have drill targets for the fall and for the beginning of next year?
Ideally, if we could have more budget, we can do all, but for the time being of the constraint, for the phase one, we will do a quick pass to, based on the outline, the mapped 500 petameters across all our property. We're going to go sample them and also identify potential new pegmatites. And then we're going to get the assays quickly because not like other metals, maybe you got to do 5 assays on longer turnaround time. So our turnaround time will be quicker. And after that, we're going to do a geochem analysis of all the projects. If some project already got high lithium content, we definitely would be a high tier. For the lower one, we could do a geochem vectoring to see maybe we got to go prospect the other side, maybe to the west or to the east, or maybe more coverage covering the pegmatite dikes. So ideally, we want to do 10, 15 projects in the phase 2 to do more detailed mapping, detailed sampling, more channel samplings to really show the consistency of the dikes grade across our projects. And then maybe 1 or 2 projects we put aside for a small amount of money that if we can do a small drill program by the end of the season.
So I started talking about lithium at this May conference a year ago. A year has passed. None of my peers have picked a lithium pegmatite stock to recommend. There's North American investors, they seem oblivious to what I think is the greatest gold rush ever. It's a white gold rush with extraordinary rapid discovery potential, delineated to show what it is, and then present it to the highest bidder based on all the stuff you've within 2 years have assembled. And Patriot Battery Metals is an example how you go from a nothing burger to a $2 billion company within 2 years. What do you think it will take to turn what I call Lithium Mania 2.0 into an actual mania for North American investors?
Well, I'll tackle that one, and Lawrence may very well chip in, but you have to lead by example. And this year, as we've already alluded to, it's going to be an extraordinary exploration year. There will be discoveries. Hopefully we'll have a bag full of them of our own. But that's what attracts people to the markets. I actually see, John, shades of the 80s coming up here. I really do. Everybody finishes work, they go for a beer. Everybody does in the field, and you can't keep a lid on that stuff. You can do everything, follow all the regulations, be as compliant as you can be, but good news is really hard to cap. It really is. And I think you have a couple of good discoveries and you see the volumes and the total potential values, which I believe will occur this summer across Ontario and Quebec. And I think you're back to the 80s and you've got rocking and rolling markets. And I think people will flood into it, which we haven't seen for decades. But I believe, like you were on the verge of a very special time in mining history here.
Yeah, I think it's very similar to the diamond story. Nobody ever heard of diamonds in Canada in the early 90s. And it was incredible what happened. But this is better because the diamonds you had to, you did geophysical surveys and there were anomalies hidden underneath lakes, so you couldn't really tell what was there. And when you did prospecting, well, it was sampling on this massive grid. And 2 months later, the picked and probed garnets come back and tell you whether this train leads to something interesting. This is so different. This is going in the field. It's like the 19th century looking for high grade gold and silver veins, except those were all skinny little creatures. Here we're talking about big deposits and with a rock value that's comparable to high grade gold. Lawrence, do you have anything to add in terms of what is going to make the market go nuts over these lithium juniors hunting pegmatites?
I think the exploration technique of lithium company will be more straightforward. Go up boots on the ground is the key, and you can get quicker results. And once you get that going, and for us, we got all these projects. I think the chances of us to finding the right pegmatite dikes with the right density, right amount, we have high hope of that, and the potential is there. And I think for our team, we can quickly delineate some drill targets to really advance the company.
Yeah, so I think it'll be maybe somebody taking a run at Patriot Battery and validating the valuation, and then somebody, hopefully you among them, demonstrating something similar, and the market's now been trained to see what happens when you start delivering 1% to 2% grades with over a substantial body. So I'm excited. I think by the end of this summer, that will probably be when liftoff happens for this. I've been talking to Al Frame and Lawrence Tsang of Beyond Lithium in Vancouver. Thank you, Al and Lawrence.